Rates soaring to multi-year highs, but if you're on the hunt for yield, a number of big names boasting big dividends that could make them worth a buy. Bob Pisani is breaking it all down at the NYSE. Hey, Bob.
Hello, Melissa. The S&P yields 1.8% on average, but 5 stocks in the Dow pay twice that amount. Now, IBM is the leader here, but that's not surprising. You know, IBM has raised its dividend every year for nearly 20 years. In fact, it's doubled its dividend in the last 6 years. So no surprise on that. We had Verizon, Exxon, Chevron, Procter & Gamble. They pay some juicy yields. That's not surprising, too, given telecom, oil, consumer staples, they typically pay higher average yields than the overall market. Now, here's the good news. The companies are still raising their dividends, and the increases are on average higher. 293 companies raised their dividends, an average of 14% this year alone. That's the highest raise since 2014. Now, you know this is coming. The bad news? Higher rates may make them a little less appealing to investors. For years, we had below-trend GDP growth and we had low rates. Now, in that environment, what do? You buy growth stocks and you buy dividend stocks, like the ProShares Dividend Aristocrats ETF. This is the companies that have consistently raised dividends over the years. This was a popular investment for years. But as soon as interest rates spiked in February, dividend payers underperformed the market, and they have underperformed as rates have spiked recently. So the picture is complicated here because many of these high-yielding stocks, you know, like Procter & Gamble, they're safety plays that tend to hold up better when the market suddenly drops, as it has recently. So it's not a simple picture. But in an era of low growth and low rates, it was simple. You wanted to own growth and you wanted to own the stuff that pays higher rates. But we may be moving out of that era, and that's the debate we're having right now. We may be moving into an era of higher growth and higher rates. In that kind of environment, owning dividend-paying stocks may still make sense under some circumstances, but it's not as compelling a case as it was a year ago. Back to you, Melissa.
All right, Bob, thanks. Bob Pisani at the NYSE. So are any of these high dividend yield names worth a buy? Well, we thought this would be the perfect time for our traders to go yield hunting.
Do some hunting.
Now, as you know, it's one of our traders' absolute favorite games, but just let's review the rules in case it's been a while.
Yeah.
Let's take Verizon, for instance. We're going to go around the horn, and if the traders think it's a buy, you will see and hear this. If they do not, you will see and hear this instead. There we go.
Makes no sense, by the way.
I think they got it backwards.
The traders don't think it's worth the hunt, so they're going to let the stock go, symbolized by the duck flying away.
Now
I'm really confused because
I'm so
the
confused.
stock, the symbol that I'm supposed to be saying I like the stock is red, as in going down, and the bad one is green, as in going up. I mean, I'd fly away right now if I could. If I could. So, anyway, let's try.
We're not going to change the rules now because that involves
Anyone
a whole
with me on this?
process. There are bylaws that need to be approved. So let's just remember that the red duck means you like the thing and the green target means you don't. Got it?
Yeah.
Verizon, Tim, dividend yield more than 4%. Are you buying this?
My duck is flying so high right now. Love the duck. I am
buying it.
Buying it, hunting it, whatever.
Wait.
No, see, even that's
this has really confused me as well.
Wait, are we on air right now? Wait, are we practicing this? Or we're on air?
No, we're really
on air.
I like the stock, Mel, here. I like it. I'm div hunting. I'm yield hunting. I like the stock. And here's why. Here's why. I think ultimately Verizon, first of all, the benefits of 5G extend beyond fixed broadband and wireless. I think these guys have undergone massive CapEx cuts over the last couple of years. This stock starts to be, you want yield, they're going to be more free cash flow, higher free cash flow yields at Verizon in the next 3 years than they've had probably in the last 20. I actually like this stock a lot. Valuation cheap.
Mel, I just got we wear these things in our ear. They're called IFBs. I'm not sure what that stands for, but I'm just hearing from our crack staff. Max Myers just said green, so the target is good, means it's going
okay.
higher.
All right, because we did the reverse
red
before,
duck
which
means
was very
it's going
confusing.
down.
But Tim, why would you like the AT&T? You know, it's actually underperformed Verizon massively as a 5.8% dividend yield.
I do like it.
Seems like that one.
I'm long it.
Okay.
So, I mean, it's a fair question.
Trading it.
It's a fair question, but it wasn't an option for me. If you tell me Verizon, I want now the green circle, not the red duck.
Okay.
It was so obvious.
The green circle because you like Verizon.
I like Verizon.
Okay. This might be an opportunity for you out there to turn your volume up and don't just go by the graphics. So if you're on mute, please turn us up just to make sure Tim likes Verizon. All right, next stop, IBM. It's got a dividend yield of over 4%. Dan, are you buying IBM?
No, I'm fading it, and I'll tell you why. I think that this is a setup.
That's the confluence of another game.
Are you a green duck or a red target?
Listen, here's the thing about IBM. I thought Bob Pisani's setup was really good, right? So what has worked this year? It's been high dividend payers or it's been growth, and this has just a high dividend. It's really been, in my opinion, a value trap for a long time. So this company needs to be broken up. At some point, I suspect they stop raising that dividend in the not too distant future. So I am ducking it, fading it, gone.
You do not like it. Red duck. All right, now that we're all clear on that, I mean, I feel so much better. I didn't understand what the graphics meant before.
I guess we're clear. Let's see. This is the ultimate test. Who's up next?
Guy Adami's up next.
Guy Adami.
We'll see if he can decipher this. ExxonMobil dividend yield just under 4%.
I think that sucker's going higher. So put that little green glass with the stethoscope thing, because I think if you look, Exxon's been in a 4-year downtrend. But we are about to break out to the upside for the first time, not unlike General Electric, by the way, in quite some time. 15 times forward earnings is not that unreasonable. They report, I think, on November 2nd. So I'm absolutely putting my scope, I'm zeroing in on that.
Not
periscope.
Not
step. is the thing on, you listen to the chest and
when
the
you get to
heart
my
rate
age,
and things like
you
that.
do that a lot.
All right, Procter & Gamble is the next one. Dividend yield 3.5%. Carter Braxton Worth, what do you say?
Well, there was an opportunity here. The stock was 70 in April, but it's already rallied to 87. That's a 23% move. I think the good eating has been had, so you shoot the duck goes down, red duck, sell, whatever nomenclature you like.
No, I like what you're doing.
Carter is very decisive, and I will like to point out that this is the first time that Carter has played this game.
You know what?
He did it perfectly.
Good for Carter, Mr. Goody Two-Shoes. He got it right. Exactly. He was last in line after they changed the game on us in the middle.
We should also be very clear that no ducks were hurt in the formation.
It's an excellent.
I don't want any emails from duck-loving people out there.